Hello, traders and investors. This is Marketgoodies.com. Today we will be discussing DUG, but first, congratulations to everybody who got in on our alert on 9/18/2011. That was over the weekend. We were discussing how oil and gas is a little bit it was a little bit overbought, and it still has room to run down, or at least that's what we were saying in our, that's what we said in our email. You could check a little bit of it out while we go over the charts that we were trading intraday. This graph is a little bit older, but it still does the job. If you look here, it says, this is when we had the OPEC oil embargo. This is when we had a real crisis back here, and you see the spike up. Then we had an Iraq-Iran war start. That happened right here. Then Iraq invades Kuwait, and we had another nice little spike. So what's going on now? We see where it fell off the cliff. We see where oil and gas just fell off the cliff. That was in 2008, pretty much because the economy was in turmoil. What's happened recently is nothing but speculation. Speculation is driving the price of oil stocks up. It's nothing like the OPEC oil embargo or the Iraq-Iran war, or when Iraq even invaded Kuwait. It's just speculation of what's going to happen. This is just total overreaction to the current price of gas and oil. A lot of it has to do with a lot of these gas stocks and oil stocks being on the S&P. So when you see a nice sector recovering or something like that, this tends to trend upwards. Okay, so we're going to be checking out DUG. That is DUG. That is a pro-share ultra short oil and gas company. Meaning, when you think something like, a particular gas driller or whoever is a little bit overbought and they're going to pull back, instead of using a margin count to short, you can also use a ETF short. This saves a lot of investors and traders, a little bit less money just by doing this instead of actually going out there. It's one of the reasons why we like to play these types of ETFs, and apparently it worked out very well for us. We didn't get in until Monday. We got out actually a little bit too soon. We got out before the spike up. Okay, it closed up about 10%, well, almost 11% today, and intraday it was a lot higher than what it is. So we're going to be watching that. Now, why did we think that oil and gas was overbought? And the reason why we had to buy an ETF that could short, actually shorts oil and gas. Couple things about this. If you look at the pattern in itself, it has a bull flag right here. That's the flagpole, and here's the symmetric triangle, actually, right there. And, even though that's not exact, we knew with the golden cross, which is this blue line, going above the 200-day moving average right here, that's a golden cross. That's also bullish. So, the weather was just right for the storm. And what we had here had that symmetrical breakout right there. So, this is something that we watch. Also, another key indicator that happened weeks before was the parabolic SARs in an uptrend. Remember, when they're above the candle, that's bearish. When they're beneath the candle, like they are right now, that's bullish. Okay, so what are we looking at now? Well, we got our resistance levels right here. We also know that there is support right around this basic area. And this area right here would be your next support. And of course, this right here. Now your 200-day and 50-day moving average would also be support. But we are very close to a breakout at this particular level right here. Also, let's check out our volume. Volume hasn't been this big since the last time we broke out. If you draw a line from here to here, when you had the breakout, you had a lot of traders come in, a lot of traders go out. Again, same thing. We have a huge spike in volume right here because it broke out. It was a symmetrical breakout. I wish I had good things to say about oil and gas. The reason why it's so high in Europe is pretty much because Europe, a lot of Europe countries, they have much better transportation than we do. A lot of people can catch buses and such like that at Again, we are not financial advisors, but we do remind you to do your own research and due diligence. Thank you for watching. Please subscribe to our YouTube channel, our Twitter, and of course our emailer. Thank you. Have a great day.